Hey there, Bigger Pockets. It's Matt Faircloth. We're doing another video blog for you guys because I want to talk to you about this row of apartment buildings that we own for today anyway, because we're selling them today. Today is the day of closing. I'm actually leaving this site right now to drive to closing after this. But before we left, I wanted to tell you just a brief story about this deal and some lessons I learned, and hopefully I can convey that to you too. So here's how this apartment complex came about. When my wife, girlfriend at the time, and I both lived in Philadelphia, we started real estate investing while we were dating. We bought a duplex, and we bought it, put tenants in, had made repairs to it, and increased the value to the point where it was worth a good bit more than we had bought it for. And then we got married, and very quickly learned that it kind of stinks self-managing a unit that's really far away. When we got married, we moved to New Jersey, about an hour or so away from that duplex. So very quickly we learned we got to sell this thing because we just live too far away from it to have to run down there and do showings if any maintenance issues come up or whatever. It's just too far away for us to self-manage. So we sold it. And we had a nice spread of value in there, so we did a 1031 exchange. For those of you that don't know what a 1031 exchange is, briefly, it's something where you take the proceeds of a sale, and instead of putting those proceeds in your pocket and having to pay tax on that, which can be a significant amount of tax, you roll it into another project. There's a lot of rules and regulations around it, and there is a ton of stuff on Bigger Pockets about 1031 exchanges, so look that up if you want to learn more. We did a 1031 into these two buildings. This is 350 and then 352 Concord Avenue. We bought these two buildings with a 1031 exchange, some more of our own equity, and obviously a mortgage that went into it as well. Just these two. So this is a 4-unit and a 4-unit is what these are. So for about a year we owned these buildings. They did well. We were happy. We got a call from a building owner across the street in 359 Concord, and they said, hey, we see that you bought those buildings. Would you like to buy ours too? And we said, absolutely. So we bought that one as well. Structured some things with another investor that came in with us and everything on it, and we put that deal together and closed that one. The rents were low. We increased rents. We did what we could to increase the income on the buildings and that. And for a while, we owned 12 units on this building. Now, if you notice, they're separate tax parcels. They're not actually a 12-unit apartment complex. They're separate tax parcels on the same block. We treat them as one big building, and the tenants do, and our books are that way. And and I'll get to why it's really important down the road here. So fast forward to a few years later, there was a bankruptcy sale on one of the buildings on the block when the market started to tank and everything like that. If I haven't mentioned, we've owned these buildings for 10 years. We're selling them today, and we've owned them for, these two anyway, for 10 years, and then the other ones for less than that, of course. But when the market started to tank, one of the buildings on this block went into a bankruptcy. It was for sale for less than half what we paid for these two. So of course we jumped on that, right? Pulled in some more investors that came alongside us, and we bought the building, rehabbed it, put tenants in. Everybody's happy. We make money. So now we're up to 16 units. Again, it's 4 separate tax parcels, but it looks like one big building to anyone that's going to look at it because it's all the same. All the units are the same. Everything's the same in the buildings. We treated it like a 16 unit. People viewed it that way as well. Then one more building comes up. That was another distressed sale after the shakeout from the downturn in the real estate market. So of course, what am I going to do? I jump on that one. That building we bought for half of what we bought for the discounted one. So we bought that one for a little under a quarter what we paid for these two. So hey, we're doing well. Needed quite a bit of work. Needed a full gut rehab. It was completely vacant. We tore it apart and put it back together. It's in great condition now. But that brings us up to 20 units. And for about a year, we managed these 20 units on the block. And it just started to make sense for some goals that my wife and I have for paying down some money that we borrowed when we first got started 10 years ago. We took out some lines of credit and things like that with people that partner with us and everything. And it's just time to make those lines of credit and some of that debt that we have that's just lingering go away. It made sense to sell these buildings. We actually really like these properties, but for our long-term vision, it makes sense to sell. Here's the lesson to you guys. If you are looking for multifamily, you don't necessarily have to go out and buy a 20-unit apartment building. You can go and buy a building that's on a strip, a row of apartment buildings, if it's a good location, and if the buildings are all identical or the same like these are all exactly identical. You walk through one, you've seen them all. So find a site like that and own it, get to know the neighbors. You never know. Eventually, they may look to sell, and before you know it, you could turn a 4-unit investment into 20 units, even more. or sorry, just way more than the 4 units that you bought by just slowly assembling properties on the block. You already know how to maintain them. You already have management in place for the one that you own. You already have leasing strategies in place and everything like that. You already know what they rent for. Why not buy more of them? So if you seek out deals like that, you can slowly over time, 10 years, build up an investment that's much more than what you originally started with. So we're really excited about this sale, and I'm really excited about the story on how we assembled this. I hope it was of value to you guys. So if you'd like to get some banter going, some conversations about doing assemblage of small multis like this to make a bigger multi, 1031 exchanges, self-management, anything like that, let's get some convo going. So leave a comment below. Love to hear from you guys, and hope you have a great investing day out there. Make it a profitable one, and I hope to hear from you soon.